Very good news coming in for you, and it came in this morning in terms of a festive cheer given by RBI Governor Raghuram Rajan, who finally decided to cut rates. Hello and welcome. You're watching Rebooting India. I'm Shweta Rajpal-Kohli, and that's the big story that we have for you on the show today. A rate cut coming finally after we've seen this come after a really long time and after several calls coming in from the industry as well as the government. So it's just 0.25% of a rate cut, but it's an important signal as inflation has finally cooled and the governor is now convinced that inflation continues to be on the downtrend. This is the first rate cut that we've seen after May 2013, and the key lending rate is now down to 7.75% from the earlier 8%. This primarily on account of lower than expected inflation numbers that came out this week, and especially the sharp decline that we've seen in vegetable and fruit prices. But overall, the singular factor that has given comfort to the RBI to actually go ahead and cut rates is the sharp meltdown in oil prices. Global oil prices are down 60% since June last year, and that means inflation has been brought under control, and inflation will continue its downward trajectory, giving that much needed relief and elbow room to the governor to go ahead and cut rates. But how does a rate cut impact you and me? Well, of course, this is the single largest gain that we've seen in the market. So first off, we've seen a big surge on the equity market, stock markets today, rising as much as the Sensex rising as much as 729 points, scaling the 28,000 mark. This is the single largest gain we've seen in 8 months, and it's primarily been led by banks, housing and real estate stocks that have zoomed. Of course, the government that has been pressurizing the RBI to go ahead with the rate cut welcomed the move, saying that this will help boost the economy further.
The reduction in the rates is a positive development. It will lead to more money in the hands of the consumer, greater spending. It's positive for the Indian economy, and it will certainly help in reviving the investment cycle that the government is seeking to restore.
This will be very positive for the economy in a number of ways. First, both spending by firms and by consumers will increase, and therefore this is it will also act directly and indirectly. Directly because it'll be easier for the credit system to flow. There'll be more demand for credit. Banks' position will be better, and also indirectly because the balance sheet of the private sector and the banks will also improve. So from the point of view of credit, getting credit going back, also it's very good.
Well, to talk more about what this rate cut really means for you and me, we've got Meera Sanyal and Brinda Jagidar, who I'll be going to in just a short while. But I also spoke earlier with well-known, respected banker and former president of FICCI, Naina Lal Kidwai, on what this really means for the economy. Ms. Kidwai, this has been a much-awaited rate cut. We've seen several calls from the government as well as industry bodies saying that inflation has cooled. It's time for the governor to cut rates. The most significant part is that, of course, the rate cut came outside of the policy, and it was a big surprise. How significant is it for the economy?
You're right that it's a much awaited move, and I think what is significant here is the governor did not wait for the credit policy announcements that would typically happen early February, that he has done this well before. And really on the back, I think, of inflation numbers, which he was always very hawkish about, has seen that inflation is indeed down. In fact, it's the lowest it's been since 2009, in single digits. And taking note of that, has decided that inflation is well under check, 0.25 move for now. And I suspect he will wait to see what the budget brings, and then look, I hope, at another 25 basis points post-March.
Okay, so you're saying that another rate cut could come, but we'll have to wait till the budget post-March is when we'll see another rate cut. But the very significant point, Ms. Kidwai, is what does it mean for you and me in the sense of the Aam Aadmi? Viewers of this channel want to know whether their home loans will get cheaper, whether their EMIs will now come down. And that's the one question that everyone's asking. It's all very well for the RBI to cut rates, but will the banks transmit the benefit on to consumers, to borrowers?
You know, the environment is such right now that firstly, such a small basis cut step, the 0.25, of course, has to indicate that we are moving down. But in itself, the cut is significant really more for the trajectory it sets out rather than the basis cut itself. And it isn't significant enough to my mind to suggest that rates themselves come down. It's also happened at a time when banks are quite stressed through high non-performing loans, and when non-performing loans remain high, it's hard to see how banks can translate this particular move to a lower basis point reduction for EMIs. So I think we may have to wait a bit. The signaling effect, of course, is important. And as in the course of the year these interest rates begin to come down, I do believe that we will see rates come off, but maybe not immediately.
All right, so we may not see an immediate pass-through coming in terms of banks passing it on to consumers, but eventually it is something that's likely to happen because remember the RBI governor has also said that he does not want a flip-flop in policy, and now that he's started the trend of cutting rates, it's a trend that's likely to continue through 2015. But Ms. Kidwai, I'd like to specifically ask you the impact on industry, because we also heard the finance minister say the singular factor that's actually holding up investments right now is the high cost of capital. Now with the RBI going ahead and cutting rates, are we going to see this spurring investments? Will the industry see this as a significant move that will bring back and restart the investment cycle?
It's significant because at long last the indication that there is a move to lower interest rates is there. Again, 0.25, as I mentioned earlier, is significant more for that signal rather than the move itself at the moment, because these were the baby steps that we had seen other previous governor actually follow as it was, but then in baby steps on the way up or down. In the 0.25 in itself being a baby step is not significant. What's going to happen in March? Are we going to see what we hope a 0.5 to 0.75 basis cut all the way down to the end of the year is what will be significant. In itself, I think, therefore significant, but we need everything else that brings industry back on the table.
All right, we need a lot more to bring the industry back on the table, and that's in fact something that many in the industry have been saying, that it's not just the high cost of capital but a number of other factors. And now the attention shifts from the RBI to the government. The ball is now back in the government's court because the RBI seems to have done its bit. One major event is over and the focus now shifts on the other major event, which is of course the forthcoming budget. Share with us, so how important and significant is this budget, and what are some of the things that you would like to see, a message that you now have to the finance minister ahead of the budget?
Yeah, so we're still a long way off from there, and I think there will be announcements along the way as we go. But I think the fiscal discipline would be one that I would look for, because there are, and I think correctly, sounds being made. We saw that in the midterm review by the economic advisor, that the need for government to spend when industry is over leveraged and therefore not spending is key. But how is that spend going to be determined and yet the fisc be kept in check is what will be very interesting to see in terms of the balancing act. I do think there are many quivers in that whole place that government has. They have many quivers to the bow, including, for example, getting the funds that we want in through some of the methods I described, spectrum, sales, disinvestments, etc. GST, of course, in time also enhances revenue. What is going to be really critical in this budget to see is how investment gets kick-started, investment by government, and in what direction? Investment by the private sector and the incentives therein in that direction. But Shweta, I really again would caution on the fact that we do not want big bang announcements. I think steady steps, steps in the right direction, taking forward what was good is very, very key.
All right, we don't want big bang announcements. Very few in the industry would actually go ahead and say that, because many actually believe that this budget should be a big, bold one. But Naina Lal Kidwai, there, many thanks for joining us and sharing your views. She's, of course, talking about how this rate cut is absolutely significant in terms of sending that right cue and signal that we are now at the beginning of a rate easing cycle. And in terms of the forthcoming budget, she, of course, believes that we don't want any major grand announcements, but a steady budget. Let me now go across to my other guests who are joining us here on Rebooting India today. Meera Sanyal, former chairperson of the Royal Bank of Scotland, well-known economist Brinda Jagirdar. Ms. Sanyal, first to you. You just heard what Naina had to say in terms of the transmission impact and when real interest rates will start coming down. Because at the end of the day, what we worry about is, will home loans get cheaper? And that's the big question that, you know, we've seen the RBI signaling that, yes, now the rate cut cycle has begun. But what about real interest rates?
I think Naina is right in the fact that there is still a lot of structural issues that the banking system does have to deal with. What's significant about today's announcement is that the governor, for the first time after a long period of time, has signaled that he believes inflation is now coming under control, that there is a secular trend downwards. I certainly think the CPI numbers, which were released on the 12th, have had an impact, and they are now discounting the fact that the base rate effect, which we've been seeing for the last few months, is, you know, they are now, at least Governor Rajan seems to be comfortable that what we are going to see is inflation trending downwards. So I think the significant thing is that we are beginning to see that the rate cut cycle, or the rates will be trending downwards. But I believe that Naina is completely right. It's going to be a while before we start seeing EMIs come down in a significant way.